The German housing market is in a deep slump. According to Eurostat, house prices fell by 13% year-on-year in June, the biggest fall since October 2004. The house price index in Germany fell from 225 to 209 today, and the main reason for this collapse was a 13% year-on-year fall in the price of existing homes. Since the beginning of 2023, the housing market has deteriorated further, with house prices falling by 6.8% in the first quarter. One of the main factors contributing to this crisis is the tightening of credit conditions. Interest rates on 20-year mortgages have risen from 1% at the start of 2021 to 4% at present. This is a significant increase that is making it more difficult to access finance for property purchases. But the difficulties are not just on the demand side. The German housing market is also struggling on the supply side. The number of new building permits has fallen dramatically, by as much as 32% year-on-year. This is the biggest fall since March 2007. The number of building permits issued in July fell by more than 30% year-on-year to a total of just 21,000. Rising construction costs are one of the factors contributing to this crisis. Prices for building materials, energy, and costs for developers have risen sharply since the beginning of the year. According to the Federal Statistical Office, the average price of construction work in 2022 was 17% higher than in the previous year, the highest increase since 1970. Although the cost growth rate has slowed slightly to 15% year-on-year at the start of 2023, it remains a concern for the construction industry. The continuation of the European Central Bank's (ECB) interest rate hike cycle and regulatory risks pose a serious threat to prolong the decline in German house prices. The slowdown in the construction market is clearly visible, and the situation in the housing market remains difficult for both buyers and developers. The number of construction project cancellations in Germany is rising sharply, and we are talking about the highest level in 30 years. The construction industry expects radical decisions from the government, in particular, a reduction in taxes on building materials. The federal government is currently preparing a package of measures to revive the housing market and support developers and investors. The situation is serious, but the measures taken by the government can only help to alleviate the housing crisis. It will be interesting to see what specific measures are introduced in the coming months. Why there is a crisis in the property market? Let's take a longer-term view. Eurostat data shows that between 2010 and 2022, house prices in Germany increased by 94.2%. This is a significant increase, although Germany was not at the forefront of these increases. The leaders were Hungary, with an increase of 171%, Luxembourg, with an increase of 135%, and Lithuania, with an increase of 132%. There is a significant difference between the prices of new dwellings and those on the secondary market in Germany. The average asking price for a new dwelling is EUR 4,800 per square meter, while older dwellings on the secondary market cost only EUR 3,400 per square meter. Despite the lack of data on transaction prices, the difference is significant. Well, the problem is rising construction costs on the one hand and a lack of demand on the other. Inflation and rising interest rates are to blame, making it impossible for Germans to afford a mortgage. This process is taking its toll on the health of the housing market. For a decade, low interest rates fueled a property boom in Europe's largest economy. But soaring interest rates and rising construction costs have contributed to a reversal of that trend, leading to the insolvency of many developers as deals have dried up and prices have fallen. This is a complex situation that requires action by the government and the construction industry to find solutions to the current real estate situation in Germany. What does this mean? The situation in the German housing market is currently extremely complicated and linked to a number of factors. The ongoing cycle of interest rate hikes by the European Central Bank, ECB, and regulatory risks threaten a prolonged decline in house prices. Deutsche Bank even forecasts a price collapse of up to 25% from the peak in June 2022. In addition, Frankfurt and Munich have been placed at the top of UBS's Global Property Bubble Index for 2022, indicating excessive speculative risk in these markets. Although the construction industry is expected to pick up as a result of falling energy and material prices, there is no sign of an improvement in demand for the time being. This could mean a further spillover of problems from the property development industry to the banking sector and, in the longer term, to the wider economy, which is already weakened by the geopolitical situation. The problem is further exacerbated by the dire demographic situation. Although the total population in Germany is growing, there are fewer and fewer young people. According to the Federal Statistical Office, of Germany's 83.2 million inhabitants, only around 8.3 million are aged between 15 and 24, or just 10% of the total population. This means that the number of young people has fallen to a new low, both in absolute and proportional terms. Compared with 1983, when 15-24-year-olds accounted for 16.7% of the total population, their share has been falling steadily since 2005. This signals a shortage of first-time buyers in the housing market, further complicating the situation in the German housing market. As the situation in the German housing market becomes more complex, some parallels can be drawn with other countries that have faced similar problems. One example is Japan, where there are currently more than 11 million empty homes, the result of a long-term demographic crisis that is having a direct impact on the housing market. This situation shows how a prolonged crisis can lead to an excessive number of unused properties. In Italy, on the other hand, the Italian authorities have taken the unusual step of offering houses for the symbolic price of €1 to encourage people to settle in abandoned villages, showing how difficult the property market can be when the demographic situation is so dire and many places remain abandoned. Germany may have to follow in the footsteps of Japan and Italy and take unusual measures to deal with the problems in the housing market. But this situation shows that housing issues are becoming a growing challenge for Germany, requiring new and creative solutions. Thank you for watching the video. Leave a comment and subscribe to the channel. See you next video.